I'm speaking today with Lars Millberg, who's the head of transaction banking corporates for SEB in Sweden. Hello Lars, thank you for speaking to us today.
Thank you, thank you.
I just wanted to learn a little bit more about your business. I understand that it's been recently restructured.
Yep.
You've taken a new view on how to run the business.
Yeah.
I wondered if you could sort of explain to me what you're doing in that sense at SEB.
Well, if you go back a couple of years, I moved from cash management into the trade finance area. And after a couple of first confusing months for me, and a lot of client meetings, I came back from one of the meetings I actually had in Shanghai with a customer. And then I realized that I'm coming back and I'm talking about the same things as I did as heading up the cash management side. So why do we treat this differently? Why are we separating cash management from trade finance discussions? Because at the end of the day, we are solving the same problem or filling the gap by other. It could be an LC, it could be a payment, but from a client's perspective, it's not that big of a difference. If you're processing air compressors, you do it the same way all the way until you ship it. And if you ship it to a site in Sweden or if you ship it to a site in Vietnam, then the bank starts splitting up this process a lot. And we as bankers, we need to understand that this is the same thing. We need to move them together much more, the trade business and the cash business. Because a payment is a payment, no matter if we are paying to that market or to that market. So that was the first, this is early 2007, when we start thinking about this in GTS Management Group. Shall we do something else? How can we avoid silo approach on the market? That we could go with the trade finance team to a certain corporate and then the other day, or the day after, come with a cash management team. Why are we doing like that? Why can't we cooperate better? Why isn't cross-selling targets working? I mean, I was heading up the trade finance and had cross-selling targets on me, selling cash management solutions with my people. And we obviously met all our cross targets, but we didn't really talk to each other in a good way. So that was the key igniter of doing something. We need to change here, otherwise we'll be too much silofied organization, and that would not be optimal. So end of 2009, we did the reorganization where we moved away from product into a segmented organization instead. So global transaction banking within SEB is now consisting of three main segments: the corporates, banks, and other financial institutions is the third ones: hedge fund, asset managers, that kind of corporates. And traditionally, we have been a bank who's always followed our customers out. And seeing the volume increase in the sales and procurement from the Southeast Asia region, China region, we've been in Singapore for, 30 years or something. We opened up in Shanghai 2005. We've been in Beijing area for longer than that, much longer than that, but as a rep office. So the corporates of SEB, the customers of SEB, are doing more and more business in Asia, and we need to be there and create good transaction solutions for them. We also do a lot of operations in Asia. In Singapore, we have our largest trade finance hub, for example, where it's easy to recruit good staff, and trade is a natural thing in Asia, much more natural than it is up in the Nordics. So the competence is really good. You find good people in that region for dealing with trade business.
Great. As a bank with global operations, I think you'd be quite impacted, of course, by all the recent regulations that are coming out.
Yeah.
Basel III, of course, having a deep impact on trade finance businesses.
Yeah.
What are you seeing in terms of the impact on your own business?
Oh, it's a very high on my list on things to deal with, and I think that I was in a meeting with BAFT IFTA yesterday where we discussed how to deal with this together. I mean, country regulatory bodies are approaching the banks in that market, and trade being so international, we need to see this in the best way. Because in principle, if you look at it as it looked now, Basel III is is very difficult for trade business, because you deal with trade as the same way as we are lending money to somebody buying a car, and it's not the same risk here. We need to understand. I mean, if you look at the default rate in the trade business, is 0.003 per mil of the transaction that has gone faulty. There was one institute that did research, and they analyzed 5 million trade transactions, and they found 1,400 faulty, or that's when they didn't get paid. So you cannot compare lending with trade finance and allocate the same amount of capital. You need to look at it out from a risk perspective, in my view. We put a lot of resources and a lot of money into being compliant with all the regulatories, of course. But Basel III has, for me, been a bit confusing, because the time pattern has been changed, and include, not include. We are one of the things that we are struggling with as bankers now is deposits. We need to have a lot of deposits in our banks. And being a corporate bank, and corporate deposits are only valid for 50% of retail deposit. So we need to attract a lot of liquidity, and that means that we need to have a good liquidity offer, even better liquidity offer than the rest of the competition. And I think all banks are thinking the same way. How do we attract liquidity? How do we do that the customer keep money on the accounts for a longer period, don't go overnight with everything? So the regulatory issues is of great concern for us, and we put a lot of money there in order to just be compliant.
The other thing I think that you need to put money into is innovation and maybe improving your business areas. And I suppose that this investment could also be used to help you defer some of your regulatory costs. Where do you see the way out of the commoditization game in transaction banking? Where do you sort of want to see your innovation, and where would you invest in that?
Yeah, I mean, first of all, we need to put 80% of our wallet into mandatory. So that doesn't leave us that much room for being innovative. But again, I think that by just organizing ourselves a bit differently, having people with different kind of combinations sitting together, talking to each other, will create hybrids of cash and trade and receivables business that we couldn't think about them before, because we were too silo thinking. So I think from SEB you will see not only the bench as a social community for trade finance or for transaction banking. You will see hybrid solutions where we, for example, integrate trade finance flows into our forecasting tools, where we look at the receivables business with a new set of eyes. And I don't know what will come up, but I know it will be magic, because people with different competencies looking at different kind of problems than they're used to will give me good solutions and good innovation going forward.
So in a way you see the right structure as being the birthplace of innovation?
Yeah.
Okay.
I think mixing different competencies together, that's the best foundation for good innovation.
Okay, great. Thank you so much, Lars. Thank you for speaking.
Thank you.